So today I'm going to do an update into TTCF stock or Tattoo Chef stock. A few of you guys have asked me to do my updated thoughts on this after 2021 and going into 2022, what I expect from this company. Now I do currently own shares in this company, however in 2021 I did reduce my position by 25% towards the end, and since then I have not bought, as I did lose some conviction in this stock or company after the financials were not up to my standards or what I was hoping for them to do, and also some strange actions from the management team. So I will talk about this a bit more on what my thoughts are and what I'd like them to do in 2022, and also where I stand from the business of a sell point of view, a hold point of view, where I could buy some more shares and everything like that. So we'll get stuck onto this one today. Now just to let you know, you probably will be able to see there's a lot of different colours on the whiteboard today. The reason why is just generally my pens are starting to run out of ink, so I'm going to have to order some new ones at some point. Not that it matters anyway, because I know half you guys cannot read my writing on the whiteboard. I mainly use it for myself, so I know what I'm talking about next on my next point. So yeah, the writing is just generally normally bad, as a lot of you guys like to point out. I was actually mentioned on another podcast, a stock market podcast, the Playing Footsie podcast, and I was actually referred to as the YouTube channel that has the whiteboard and you can't read the writing on the whiteboard because the writing's that messy. That's where we're at. I guess we're known for something, but yeah, we'll get stuck onto this. So what is next for Tattoo Chef? Well, unfortunately, really for Tattoo Chef, it wasn't a great finish to 2021. Going into 2020, and when it came through a SPAC, it was pretty positive. Q1 was pretty positive. Q2 was pretty positive as well. But when we got to Q3 and Q4, unfortunately, there were two back-to-back very poor quarters for Tattoo Chef. And I am actually quite surprised to see the share price actually holding up quite well for Tattoo Chef. It is down from its 52-week highs, but for a company that is a bit more of a risk-on company, that is, you know, a growth company, unprofitable, we've seen a lot of these companies, especially that have come through SPACs, be hurt an absolute huge amount. And I'm quite surprised to see this actually still holding up around that $10 mark. I would have expected ex-SPAC company that is a bit more high risk, a bit of a growth company, and also had a pretty poor 2021 to be hurt massively and to be kind of pushing towards that single digit range right now, definitely below pre-SPAC price. So yeah, that's quite surprising to see it holding up so well. But yeah, going back onto the point, it was a pretty poor Q3 and Q4 at the end of 2021. Now, unfortunately, what led that to be a poor couple of quarters in the back end of 2021 is we had big guidance misses. Now, one of those guidance misses were from revenue. Revenue was missed a huge amount, and it was starting to get to the point of view where we were looking at guidance and we were looking at the numbers that Tattoo Chef were putting in through Q3, and you're like, Tattoo Chef are going to actually, you know, when we got into Q2, we were like looking at it going, oh, these are quite optimistic numbers. Got into Q3 and like, oh, with that quarter there, we're probably going to really struggle to meet this guidance. And then obviously Q4 was once again way below expectations. So the revenue was a massive miss, and it was a miss as well that was only soon or recently after they hiked their guidance up as well. So it was a big U-turn from basically when we saw guidance hiked up and it was quite positive, and very soon after that we then saw a complete U-turn in the guidance. So clearly something went wrong in a very short time frame in Tattoo Chef. And as well as missing guidance, which is very important as a growth company, is then we had the profit or the gross margins. Well, we had the lack of profit, but in particular the gross margins were getting worse and worse as the year were going on, which is not good. And with revenue not improving at the right rate as well, obviously we will need to see revenue going up at a very good rate, because that will mean that Tattoo Chef commands a higher valuation. As well as the revenue growth, that's what we want to see. This is a revenue growth company. This is what we invested in for the Tattoo Chef brand. We want to see that sales are going very well, and it did not really look like that towards the back end of the year. And with sales not for the Tattoo Chef brand not going that well, and also seeing profit not doing very well, gross margins going down, it also means that further down the line, when we start taking into account profitability of this company, they're going to have thinner margins, they're not going to have as much revenue going down to the profit. It just was not a good combination altogether, and that is the very poor back end to the 2021 that we saw. And during 2021, Tattoo Chef made some big acquisitions. These acquisitions gave us a lot of hope. We saw guidance get hiked up. We saw that these acquisitions were already going to start contributing revenue to the company, and by the time we got to Q3 and Q4, it seemed like these acquisitions acquisitions were hardly contributing any revenue to the top line at all. And in fact, if anything, these acquisitions actually really hurt Tattooed Chef in 2021, because it seemed like they took a big massive blame for the lower gross margins, because Tattooed Chef is the high brand that you can have higher gross margins on. A lot of the acquisitions they were making were private label companies, and these private label companies were sending the gross margins down. So more than anything, the acquisitions did not really seem to support Tattooed Chef in 2021. So that's something that we need to see improving as they change a lot of them products to the Tattooed Chef brand. And what also was a key thing is there was a lot of false hope given by the management team. Throughout the 2021 period, we heard a lot of positive statements from the management team, everything going very well, and as we saw, everything really financially wise, all the metric wise, were getting weaker and weaker inside the company. It was not growing to expectations. And one of the big false hopes that we were given is we were hearing so much about new deals coming in. We were hearing about new store locations. I believe we were somewhere at the start of the year around, around 4,000 stores. By the end of the year, we were pushing 12,000 stores. We tripled our store count. And what benefit did we see really from that? Not too much. We saw as well the amount of delivery points that was also increased. Same again, there was all this increase in potential distribution points, and there just wasn't that shown in the financials as well. So we were given a lot of false hope from management team that made it sound like everything was going very well, where in fact it wasn't going that well altogether. And then to top it off, we then just had more problems from the management team. We had a lot of reporting issues with a lot of numbers that were not being reported correctly. We had the famous incident of Tattooed Chef having to cancel earnings literally an hour before they were supposed to report. We then had the CFO leaving. We had strange circumstances where shares were being gifted, a huge amount of shares were being gifted, which is not great. So we had the combination of the financials. We've been in a bit of a period of time here where we've seen a lot of companies growing the financials very strong and the share price not being rewarded. And in fact, we have expat companies that have put in really impressive results in 2021, and the stock has been hit a lot harder than Tattooed Chef, which is really strange. And then we have a stock like Tattooed Chef that was nowhere near improving the financials in the right direction, or way below my expectations. And then we also have management team then doing a few strange actions as well, and it just all led to a very poor finish to 2021, which was not great. So that was where we were at in 2021, and that's where it led me to kind of lose conviction buying any more shares in the company. And in fact, all these issues led to me to actually reduce my position. Now, going into 2022, this is what I like to see. Now, personally for me, I'm a long-term investor. I invest for long term. Now, I've got to make sure the company does stay on track for my long-term goals. And I don't like to go too short-term. I don't like to go quarter over quarter for a business. But when we do start having a period of time where there's a lot of quarters building up to a long period of time where there's a lot of bad stuff going on, which we are starting to see, I start to get a little bit worried here. So I don't want to jump ship too early because it is a long-term investment. But when you just see quarter after quarter the story getting worse, I do start to get worried. And going into 2022, these are my 3 key goals for Tattooed Chef. So first of all, the growth has to come back. When we saw Tattooed Chef through 2021, we saw weakness quarter after quarter without the Tattooed Chef brand growing. Now, we need to see Tattooed Chef go back to putting in good amounts of growth. It shows us demand for the product, of course. And as well as that, we want to have higher growth. That means that Tattooed Chef will trade at more of a premium because it has growth. The product is in demand. And as this stock or the company continues to grow revenue, what will that will mean further down the line is that there'll be more profit going to the bottom line. And also you're doing more units. That means better gross margins. It's just better overall. So we need to see Tattooed Chef start to put back in good amounts of growth and not see the growth slowing. So ideally, we want to see high 30% revenue growth from Tattooed Chef. Now, at the start of 2022, we might not see that straight away. It might be a little bit of a slow Q1, but as the year goes on, we want to see that happening. We don't want to see it sitting in the low 10-20% revenue growth rates, because that will not be good enough for what this valuation is still at. So we do need to see the revenue growth start coming back in this company. The next thing is the higher gross margins. At the moment, the gross margins that Tattooed Chef are running at are terrible. They are awful. So we need to see Tattooed Chef start improving those gross margins, and that will mean they can lead a better path to profitability further down the line. So that also comes from higher sales, but it also means that some of the issues talking about introducing higher margin products or getting rid of the private label products which have lower gross margins, we need to see that carrying on. So that's another important thing, because that is a path to profitability further down the line. Next thing, or the last thing, is if we see higher 30% revenue growth, if we see the gross margins start moving back in the right direction, what this will lead me to do, which is very key, is give me conviction back. I, at the moment, have lost conviction over the last few periods or quarters in this company. It's just not delivering on expectations. It's below expectations, and that's the key thing. I do not mind if I have a company and the share price goes down or flatlines for a period of time, as long as I look at the company and go, the fundamentals of this company keep improving. At the moment, the financials, the fundamentals of Tattooed Chef are not where I want them to be. They are far below what I expected. And if I don't see that, I cannot have conviction to carry on buying the stock or potentially even holding the stock. At the moment, it's nowhere near my expectations, and that's why I've lost conviction to buy it. So I need them to start moving back in the right direction so I have conviction to go buy the stock. At the moment, I'm just at a hold waiting to see if this develops well over the next few quarters, and if 2022, Q1, Q2, we see the improvement, I'll be a lot more happier. If we get to a period of time where in Q1 and Q2 of 2022, we don't see the improvement in this company, I'm going to lose even more conviction in here, and I will be more tempted to move away from this company and sell it. So it is a very important year in 2022. Ideally, if I was to sell this company, I would not like to do it right now, because the thing is we are very much in a bear market. It's a very much risk-off market. People do not want high-risk growth stocks at the moment. So now would be the worst time to rebalance out a position or sell a position. So ideally, I would not want to do it at the moment. However, looking at how this company is doing, that it might come to that, which I have to be aware of. So at the moment, I am at a very much a hold position of Tattooed Chef. I'm seeing how Q1 and Q2 delivers. Hopefully the company then puts back in some good financials and gives me some conviction back in this company. However, if in 2022 I see another poor year of financial delivery by this company and also some mismanagement, I will be moving away from this business at the moment. So yeah, I'm very much sitting back and watching what happens in the next 6 months with this company. And as well as that, we are just about entering Q1 earnings season as well, so I would not have to wait too long for the first quarter earnings. So yeah, a bit of a mixed bag on this one at the moment. I'll have a better idea in a couple of months really on this stock. So hope you enjoyed me updating you on this stock, Tattooed Chef or TTCF. Been a while since I've talked about it, since I reduced my position, but those are my updated thoughts on it at the moment. So hope you enjoyed it. Let me know what your thoughts are. If you could, like the video, and I'll catch you in a bit.